Hello and welcome to CMC Markets Trading Outlook for the week of August the 17th, 2015. My name is Colin Szyszynski, Chief Market Strategist. Our topic this week is we're going to take a look and see has the China impact on gold and oil run its course. We've seen some fairly significant trading across commodity markets, currency markets in particular, after China surprised the market with two devaluations in a row in very short order following one day apart from each other. That sent a lot of shockwaves through the market, but as we've neared the end of the week, some of this appears to be settling down. We may be seeing things start to move back the other way. In the case of gold, the devaluation of the yuan suggested the possibility of a currency war that could devalue paper money and lit a fire under gold. In the case of oil, the devaluation shockwaves raised concerns that demand for energy and demand for other commodities could continue to decline, and that dragged on energy prices among other commodities. So now we'll take a look and see, though, as we reach the end of the week, things might be starting to bounce back a little bit, and this could continue into the new week. The new week, scheduled news for China, there isn't any. A lot of news in general subsides, and we do get more of a focus on the US and the UK, and perhaps away from China. So we'll see if some of these trends may start to reverse themselves in the coming week. And I'll show this first with gold. We had gold had sold off fairly substantially through the year. We did get it here an interesting. This had looked like a symmetrical triangle. Looked as though gold could continue lower as a consolidation. Instead, we've seen gold pop up out of it. Gold had gotten extremely oversold on the RSI. We've had a rebound. It's back up into the 50s, and now the RSI has slipped back under 50. So that suggests this might be a trading bounce that's run its course. We had a 23% retracement of the decline back from the January top, and then look, it ran into resistance right here around 1126, and it started to fall back down again. In particular, we had this day here, which was a bit of a dark cloud cover as well. So, and now also, if we look here at the client sentiment, we'll see that. That here we've got a sharp decrease in position value. So clients have trimmed off their long positions to the tune of 14% for top clients, 7% for all clients. That suggests to me that clients who had been long are taking profits out of those positions. At the same time, we'll see here if we look at the minute chart on gold, it had run into resistance here about 1121, 1, 2, double top, and then boom, the bottom fell back out from under it. So it's looking like gold's rally has run its course. Where could it come back to? Well, the first, I'll blow the gold chart back up again here for a second. So the first support here would be the top of this old channel, 1110. The breakout point here is 1100, also a round number. If it continues to hold above 1100, gold could build a higher base and continue to trend upward. If 1100 fails, then this broader downtrend could be reasserting itself. So moving on now to crude oil. We'll bring up the WTI chart here. And we'll see what's significant about crude oil is that we'd seen it here, and it had, of course, had the big sell-off and hit its low back in March. March low was about 42.30. Today it dipped under that and has come back up. We're getting what's close to a hammer candle here as well, and we have a positive divergence on the RSI. So it's telling us downward momentum slowing. We've had an attempt to break down and it was rejected by the bulls. It's back up above 42.30 and kind of clinging here. So this big sell-off here that we've had pretty consistently for the last 6 weeks be running out of energy and all. It's certainly possible here. We could be setting up for some sort of consolidation and base building in crude oil. The 2008 lows were back closer to $35. There's still the $40 round number as well. So we're getting close to a potential support zone. I'm not going to say this is going to be the big low for crude oil, but it does look like we could be into a temporary low for crude oil, perhaps some base building in the near term. And because what's interesting here in terms of rebound is, again, when we did get a bit of a bounce in crude oil today, clients haven't been buying it. Clients have been taking money off the table. Long positions have been getting trimmed back into this rally. So it does look as though clients are seeing this as a trading bounce, but I'm figuring that we could probably see it go sideways for a little while in a trend that sideways range that might start to establish itself. If we take a look here, and I'll bring up Brent as well to take a peek at. And also I'll look at the copper price. So in terms of Brent, we're seeing it has not yet taken out its low. Brent's low was back in January. It's still hanging in and around the $50 range. It's gotten oversold on the RSI, but so far that seems to be trying to resolve itself by going sideways rather than staging a trading bounce. And let's just bring up the price of copper here as well. Copper, of course, is very sensitive to the Chinese economy in terms of demand. We had seen copper break down to a new low, but it was back in June, July. More recently, even with the turmoil in copper, it hasn't really. I mean, it had one day here where it came down and popped right back. Nice hammer candle, nice doji candle. So what have we got here? And this was we had an earlier attempt at a breakout as well. So what do we had? Generally speaking, the bears have dominated in copper, but these three candles here suggest that things are starting to go back to neutral. The bears are losing their grip on the copper market. And the RSI here is also telling us downward pressure is starting to ease and we could get a trading bounce out of some oversold conditions. So some of the fear and concern about China and its economy and all may now, and its stock market and government getting involved in currency markets and stock markets and other things, that may all be getting fully priced into the market. That may now have all started to wash its way through. And if we don't get any new China news, some of these markets could be primed for a reversal or a rebound back in the other direction in the coming weeks. So that could be a significant theme for trading. In terms of global stock markets, we're basically drifting. We're in the summer doldrums. Earnings season is over, and we're into what's historically been the weakest time of the year for stocks. And I know this one looks like a busy chart here for the DAX. I've drawn in several Fibonacci's here to give us an idea of potential trading levels. But we had a big correction from April through the beginning of July. It's been going sideways, but look, we are drifting back down. We've successfully held the 200-day moving average here, but RSI suggests downward momentum still increasing. We could yet see a retest of this being back under 11,000 here. We could yet, if we break this 200-day near 10,915, perhaps see this Fibonacci cluster here closer to 10.8, and this low back here was closer to 10,675, the low end of the current trading channel. Similarly, if we take a look at the US 30 here, we will see that it's been drifting its way lower as well. We're in this huge mid-cycle consolidation. It continues, but look at this. The big low here, which was also a 50% retracement level of this big move back from back here. We retested the channel low here. Big hammer candle, doji candle, suggests that the bulls are starting to lose control and the bulls are starting to get something back. Similarly here, we're seeing the bears losing their grip down here as well. Downward momentum is starting to slow. This 17,125 channel low has held. There's more support in here around 17,000. Even though we have had this death cross on the Dow is still intact. So far, it looks as though we're looking at a sideways trend for the Dow, currently hanging around 17,415. And if we look on the Dow here in terms of the client sentiment, mildly bullish, just barely in the 50 to 60% range positive. So and that's indicative also where we could be a little bit slightly positive, probably just because we've come down in the last few days, but overall still more signs of indecision in the marketplace. As I said, the focus for this week in terms of news is actually pretty light here. And I'll just highlight some of the key things we do get. On Tuesday morning local time, we get RBA minutes for Australia, but most of the focus really of economic news is on the United States and the UK. So Tuesday for the UK, we have its inflation report, consumer producer, house prices, retail prices, you name it. The U.S. it's a fairly busy week for news right through the week. Empire Manufacturing's on Monday. On Tuesday we get housing starts. Wednesday we get inflation and FOMC minutes. FOMC minutes, people will be looking for more hints of will the Fed raise rates in September or not. Thursday, Philly Fed existing home sales. Friday, we get flash manufacturing PMI for Germany, France, and the United States. First, people looking and trying to take a catch of what's going on in terms of in terms of what's going on with the world economy here in August. So just to highlight that, Canada, we have retail sales and consumer prices on Friday as well. So we do have a busy week. We could see the U.S. dollar active. I'll take a look here briefly at a couple of currency pairs. Let's start with the U.S. dollar index. Has leveled off here, had a double top here. It's leveled off in this 96 to 98 range. U.S. dollar CAD still looks like it's topping out. It had a big run. It had a big run here, up from $1.20 back in March. It's topping out here near $1.30. RSI's gotten overbought and is rolling back down. The August here it is drifting back off right now, holding in this 129.60 to 131 range. Could be a possible head and shoulders top formation. Let's see. We've got a shoulder here. We've got a head here, and if we work lower in here somewhere in this over the next month or so, we could possibly see a right shoulder form, which could be quite interesting for dollar CAD as well. We'll look at sterling and euro as well. So sterling has been holding pretty steady here in and around 155.80. This Fibonacci level here, bouncing around it. RSI is bouncing around 50, so a neutral trend. The broader channel off this low here, 153.25, 159 even, and we're still quietly, slowly working our way higher. The UK inflation data will be significant. People still speculating on when the Bank of England might start to raise interest rates as well, most likely sometime in the first half of 2016. And finally, we'll look at the euro dollar. Another example here, how this China rebound that had seen U.S. dollar weaken a bit and euro pop. This looks like it's kind of running out of gas as well here. We had a nice lift up from 108.60 up to 112. It's ran into resistance, particularly these highs here closer to 111.55, drifting back towards 111.11, and of course the next big support is in this 109.80 near Fibonacci to 110 even round number resistance level. So we're working our way through the summer now. We're into the seasonally weaker time of the year for stocks, but it does look like, unless we get another surprise out of China, that action has probably run its course. We are seeing gold and oil looking a little bit tired and starting to rebound back the other way. We could see choppy trading in stock markets as well. So, and earnings is a little bit quieter this week. Where we do get some interest is likely to be in the retailing sector. We have reports this week from Wal-Mart, Home Depot, Sears Canada, and as well as Lowe's and Target. So we do have it's really a main focus in on the retailers this week for earnings as earnings season winds down.